Hi everyone, welcome back to Atrium Research's channel. Today I have the pleasure of interviewing J.F. Boursier, the CFO of ADF Group, which trades under the symbol DRX on the TSX. We've been covering DRX since October of 2023. It's been quite the wild ride with stock rallying from $4 to $20 and then suddenly back to $8 or $9 now as the company executed on large revenue growth, EBITDA growth, but then got caught up in the tariffs over the last couple quarters here. So today we have JF, and we're going to be talking about the current state of ADF, how the tariffs are affecting them and their financial results, and where we see the business going forward. So thanks for being here, JF.
Thank you.
So maybe to kick us off, if you could kind of run us through the Q1 financials that you guys reported a couple weeks ago and how those came in.
Yeah, strange times and strange quarter overall. Considering everything that happened since the beginning of the year, we were actually pleased with the numbers we posted for our first quarter. Revenues at 55 million. We knew the revenues were going to be. We knew the revenues were going down compared to previous quarter. We had mentioned that when we released our fiscal year or end of year numbers. And obviously, all the discussion and uncertainty around the tariff had a significant impact on the revenues. So that delayed the number of projects that were already in the backlog, that delayed a number of projects that we had signed late in February, that we announced late in February. With all the uncertainty, some of those projects got delayed. So that's what created the shortage of hours. When you created the shortage of hours during the quarter, and as such explains the revenue. To add to the downfall is that the first quarter of last year was actually our strongest quarter from a revenue standpoint. So obviously comparing quarter over quarter was actually even worse than the optic was not really good. But this said, we were able to post 55 million, margins of 22%. We're also pleased with that, although down from previous quarter, but obviously the lower volume had an impact on the margin from an efficiency standpoint. And the indirect impact of the tariff came in form of higher steel prices. All the U.S. steel mills have increased their pricing. So obviously that impacted our cost base. So with that, we posted an EBITDA of just over 10 million and net income of 8.7. So considering everything that happened, as I mentioned, we're happy with the number. The balance sheet was even stronger actually than the past quarters. We finished the quarter with around 75 million of cash on hand. We generated cash during the quarter. So the balance sheet, the working capital is still really looking good. We also finalized just after the quarter end our NCIB. So we purchased almost the full 1.8 million that were available for the program at an average price of just under $8 for the full 1.8 million. So that's behind us. We haven't decided if we want to do another NCIB. In any case, by TSX rules, we have to wait till December before initiating a new NCIB should we want to do that, but we haven't discussed that yet. So all in all, considering everything, decent quarter.
Got it. Okay. And then regarding the tariffs, I know some things have changed with your guys's perception of what affects you and what exemptions there are. So maybe just give the listeners a summary of what the current state is and how it affects you.
Yeah. Well, the tariffs themselves were presently impacted by two tariffs: the 25% on the overall 25% tariff on all the products, and we're also impacted by the now 50% tariff on steel and aluminum. This said, for both those tariffs, there are exclusion for the overall 25% tariff. Our product do meet the USMCA definition. So because of that, the 25% tariff don't apply on our projects, US projects fabricated out of Terrebonne going back to the States. And as for the steel and aluminum tariff, the 50%, the now 50% tariff, there's also an exclusion if you buy your raw material. So if we buy our steel from US mills, we are also exempt from those tariffs. So we are for new projects, not only meeting the USMCA definition, but also are and will be buying our steel from US mills. So specifically the tariffs, especially from this point on, based on the definition as they stand today, and this is, I'm not sure when this will become live, but by the time we go live with an interview, the definition might have changed, but based on what we know now, we are exempt. This said, um, the discussion I've been going for a long time about tariffs, and obviously uh, the back and forth, the change in how the tariffs would apply, would not apply, the change in the exclusion created a lot of uncertainty. So when we talk to our clients now for new projects, we are able to tell them exactly what the impacts or non-impact of the tariffs are, but based on what we know today. And when they ask the question, well, what happens if something changes in the coming days, in the coming weeks? And that nobody has an answer for. In normal circumstances, these type of financial discussion or economic constraint are there for a set period of time. You know when they're coming, and if they're changing, normally you have uh, you have a discussion well in advance, and you have a time to adjust. We're not in that type of environment now. So these tariffs and the exclusions and the definition, as I just mentioned, could change, and that's what really worries our client because obviously if the definition, if we can tell, as I said, we can tell them that as of today, both tariffs would not apply, but there's nothing telling us that this won't change in the coming weeks, and that we can guarantee to the clients. At the same time, we can't tell the client that if for whatever reason we end up paying 25 or 50% tariffs on the material going back to the States once it's fabricated, we can't tell them that we'll absorb those costs, as well as they can't tell us that no problem, we'll pay you the additional cost. So that still creates a lot of questions, a lot of uncertainty. In some instances, some clients will, because of the unknown, they will turn to US fabricators. We do have the Montana plant, but some clients are still uh, a bit nervous about the entire situation. This said, especially since the change in administration in Canada with the new government in place, and generally speaking, the tone is a bit better. The communication line seem to be a bit better. So I think the overall sense is that we're heading toward hopefully a solution to all of this. Um, Still no word, and this might again change in the coming weeks, but at least, as I said, the general tone and the overall anxiety and uncertainty around all of this seem to be quieting a bit, but it's still obviously, when we're negotiating contracts, we're dealing with big dollars, and that could have a significant impact one way or another for our clients or us. So these remain obviously uh, discussion points when we try to finalize contracts with our clients.
Right.
Um,
And then I guess with this new exemption, have you guys seen an uptick in negotiations and conversations you're having? Is it kind of putting people at ease?
A bit, as I said, the people understand the rule as they stand now, but they're
Mm,
still the people also understand, and when I say people, our clients, our U.S. clients, understand that because of how things are decided now, this could change in an instant next week, depending on what the new strategy might or might not be. So that's the concern that most people have is people understand the rules as they stand today, but everybody understands also that this could change significantly without any advance notice in the coming weeks or months or not.
yeah, understood. And then how about with Canadian clients? As you know, we still have an infrastructure problem here in Canada. There's a lot of spending going on. Is that still a market for you guys to kind of diversify revenue into?
Yeah, we're obviously looking, trying to diminish our exposure to U.S. volume, want it or not. The fact that we are in uh, steel manufacturing and that the big client or the big volumes are in the U.S., it's not only hard, it would be impossible to totally back away from the U.S. market. But obviously and historically, as you know, around 85% of our revenues, consolidated revenues, are coming from U.S. projects. So we are obviously looking at expanding the Canadian portion of our backlog to reduce that 85% by whatever percentage point to try to stay away from the uncertainty around the tariff. We are having different discussion. There's obviously with everything that happened, both federal and also provincial governments have announced funding of projects. For us in Quebec, obviously, Hydro Quebec is a big supplier of work, and they did accelerate some projects that they had. We are a supplier of choice for Hydro. We've done business with Hydro over the past, since the past years, a couple, 2, 3 years. Obviously, looking to expand our portfolio of volume with them. We're having good discussion, and hopefully something will pan out in the coming weeks. There are also other possibilities, not only in Quebec, but elsewhere in Canada. So uh, everything's on the table. We're obviously, as much as possible, trying to expand the Canadian market, but obviously we're not the only Canadian steel manufacturer that has that same vision and that's trying to do the same thing. So, but hopefully with the government intention, as I said, federal and provincial government's intention of increasing their investment, and the Canadian government has also made a number of announcements. They've put funding. So we're looking at all the options to try to maximize our Canadian content.
Okay, for sure. That makes sense. All right. And then on the balance sheet, you guys have a great balance sheet, good cash position on hand. How do you see yourselves allocating capital in the future now that the NCIB's maxed out? You guys looking at CapEx projects or acquisitions or paying down debt? What's kind of on the plate?
Yeah, I think short term, and we did mention that on our last conference call with analysts, and I think actually answering one of your
Mm,
question. Uh, we are looking at a number of things. First, obviously, one possibility to, again, try to minimize the tariffs impact would be to increase our capacity, the fabrication capacity at our Great Falls, Montana plant. So we are looking at that, maybe adding some automation to that plant and also increasing the throughput. So that's one option. We are also looking at maybe acquiring some fabrication equipment for Terrebonne, again, to further increase the efficiency and maybe help us on new projects to be a bit more efficient. So we're looking at those. There are a couple of other things that we're looking at. So First and foremost, I'd say for the time being, we are looking at maybe increasing to some extent our capex investment for the next year, year and a half. Still remaining, obviously, we're happy to be facing this uncertain situation with a balance sheet as strong as it is. So we want to also keep the working capital strong because at the same time, we do have a good backlog. We do have 330 million of backlog. So there's projects that will get going in the coming weeks. We will need to obviously purchase the raw material, so put some pressure on our payable and our working capital from that standpoint. And as I mentioned before, we've seen the price of steel increase from the U.S. mills, and we might see further increases now that the tariffs have gone from 25 to 50%. So we're still remaining prudent from an overall balance sheet standpoint, but we do have the luxury of investing smartly in our own equipment to try to better position ourselves, be more efficient, and maybe answer some of the concern that came from the tariffs.
Okay. No, that makes sense, and that's good to hear. All right. And then maybe what catalyst should investors be looking out for over the next couple months here?
Uh, well, I think that also, as we mentioned, we're still the Q2 will still be somewhat uh, slower than our previous quarter. So we are looking, we should be able to post slightly better revenues and hopefully similar or better margins for the second quarter. But the second half of the year will definitely be back to more normal volume. Hopefully, considering that everything remains as we know it today, there's always the chance of things changing. But as I said, we do have 330 million of backlog, and that will need at one point that will hit the fabrication floor of both our shops in the coming weeks and the coming months. So the second half of this fiscal year and the beginning of next year should be back to revenue levels more in line with what we were seeing last year. Uh, I don't think shareholders should be expecting margins to go back to the 30% level we saw last year. As we explained a number of times, last year margins were exceptionally good for a number of reasons, but really sort of the perfect storm, but a good storm, as I said before. So everything lining up nicely. So even without the tariffs and the impact of the higher steel price, we were expecting our margins to go down a bit this year. But we should be, on average for the full year, we should be able to post margins that are better than the 22% we posted in Q1. So
Yeah.
without getting into specific, but mid-20s as a percentage of revenues for the full year, it's probably something that makes sense for us this year. And we'll see what happens with the steel price. So if the steel mills keep putting pressure on their pricing, we might see some margin erosion. But again, these price increases not only hit the Canadian fabricator, they hit all US and Canadian steel manufacturer because everybody needs to basically buying from them. So that's one reason they're increasing their prices. But that also puts all steel fabricators, be it Canadian or US, on the same page from at least a steel price basis. So we're dealing apple to apple, so it helps us well, at least it doesn't put us at a disadvantage when negotiating with clients because we're all buying our steel from the same place.
Yeah. Okay. And then what about new contracts?
Uh, Working hard, as I said, hopefully in a position to make announcements in the coming weeks uh, of projects. Still seeing good projects in the US. In spite of the uncertainty, we haven't seen any cancellation or push to the right. So there's still pretty nice and sizable projects being put on the table in the US. As I also mentioned, working hard to try to finalize things from the Canadian side of the border. So nothing imminent, but hopefully before the end of the second quarter, we should be able to have new contract announcements and continue to maintain. The idea is really to keep fabrication in hours in front of us to have a clearer view on our shops. That's really the key to our success, to making sure that we keep the backlog at certain levels. So hopefully the Canadian and US government will come up with an overall deal in the coming weeks. We'll see how the next few weeks pan out. If we have that deal, that should further relax the overall environment and be a bit more conducive to finalize these contract negotiation. So I guess we'll see how the next few weeks work, but the fundamentals are still there. And as I said, from a bidding pipeline, we're still seeing we're still seeing nice projects out there. So it's never easy to finalize those projects. It's not getting easier with the tariffs and their impact, direct or indirect. But still working hard to make sure that we sign contracts, but signing contracts, understanding the risk associated to those projects, and not putting everything we built over the past years in jeopardy by trying to be too aggressive from a backlog standpoint. It's nice to have those contract announcements, but we still maintain our focus on risk management and making sure that we do grow the backlog, but we grow it with contracts we're comfortable with.
Yeah. All right. Well, those were the main questions that I had. So, JF, thanks for walking us through the story, and we'll keep an eye on the stock for those contract announcements as well as the financials over the next couple quarters here. So, sounds like an exciting time, and we're watching the news for any improvements on the tariff front, and we wish you guys the best of luck.
Thanks, Nick.
And for all our followers, if you haven't seen our research on ADF, you can find it on our website at atriumresearch.ca. Thanks for the time, JF.
Thanks.